My very special guest today is Michael Hunter, who hails from Ontario. And I'm going to get Michael to introduce himself in a little couple of minutes here. But I wanted to have Michael talk about words and the importance of understanding language. And Michael has talked and taught me a lot about the differences between the meaning of words and the original meaning of words and how these things can sometimes trip us up and sometimes how the definitions of words can empower us. So, Michael, would love to get you to describe a little bit about yourself, your background, and yeah, welcome to our channel.
Great. Thank you very much, Mike. I appreciate the opportunity here. And I know you just do such a great job getting the message across to actually, you know, take control of your finances and wake up to what actually is going on. So I respect everything that you do.
Appreciate
As
that.
far as who I am, I'm a certified financial planner and infant banking practitioner. I haven't always been in the financial planning business. Previous to this, I was an entrepreneur myself. I own two successful restaurants. I transitioned into financial planning as my kids grew up. I've also written two books on financial planning. One is called Taking Control of Your Money the Smart Way, and also Taking Control of Your Budget the Smart Way.
You're singing my tune. I love
Excellent.
the topic of budgeting. That's amazing.
I think budgets are a bad word.
Mm,
It's almost like diet's another one of those four-letter words because the traditional concept of budgeting is all about lack and what you can't spend money on. So in the first page of that book, I talk about that book's not about budgeting, but it's about actually putting a spending plan together because we know we're going to spend our money. We just have to plan it out better rather than try and control it and cut back and almost have an austerity mindset. Why not have a prosperity mindset as far as we're going to spend our money? Here you go. Here's a plan to do that. Does that make sense?
yeah, 100%. It's really about reverse engineering how we think.
It's about changing the words that we use to create more clarity and more understanding so we can actually communicate with each other and communicate in a way that we all understand and are all on the same path. That way, we're creating more affinity with each other and we know what's going on. Because let's face it, language has been bastardized for the last number of years, only to create more misunderstoods, to make you confused. And there's so many examples of that that we've actually talked about on in the past. For example, we're both infinite banking practitioners and we believe in life insurance. Well, when it comes to insurance for our cars, we buy collision insurance just in case our cars are destroyed or damaged in a collision. We buy fire insurance for our home just in case our homes are destroyed or damaged from a fire. Now, we buy disability insurance in case we can't work and because of a disability. Why do we buy life insurance only to pay out when we die? Shouldn't that be called death insurance?
Yeah, you're insuring for a specified peril, a specified risk, and you're transferring that risk to an insurance company to cover the financial and certainly not the emotional, but it certainly would help to have the money to properly process the grievance process for your
If you
beneficiaries
die.
in your estate if you pass away.
Well,
Absolutely.
shouldn't that be called death insurance? I believe that life insurance can and should be designed so you never run out of money while you're alive. Bring in the life part of it. And when it comes to the infinite banking concept, that seems to be really the underlying philosophy of it.
Let's shift into the real kind of words and language that we were talking about the other day between a group of us. And that's the idea of credit and debt. And the language around credit and debt, specifically, the original language would give some gravitas to some differences between the two. And I think even I'm guilty of interplay is switching that up between debt and credit and using those words interchangeably. But in your definition, that's not necessarily the case. And I would love for you to give maybe some background, some history on it, and why it's different.
Well, I appreciate that, Michael. It's not my definition. I think they do it just to confuse us. Why do we have two words when one will do? When it comes to growing our wealth and investing and borrowing money, many people use Robert Kiyosaki's definition of debt and credit. And his definition was debt is borrowing against a depreciating asset or no asset at all. So borrowing car loans or borrowing on a credit card, that's debt in his eyes. And credit is borrowing against an appreciating asset. So a mortgage or something borrowing to make yourself money. That's Robert Kiyosaki's definition, right from Rich Dad, Poor Dad. Now, even the first time I read that book, I said, well, this kind of sounds good, but it didn't sit well with me. It just wasn't quite right for some reason. Personally, my grandmother was a librarian. So anytime she said that you got confused or didn't know exactly what a word meant, go look it up in a dictionary. So I did. And I noticed that when you look up in a dictionary, and you're welcome to do this right on your phone, type in debt definition, it usually comes up with the definition that debt is typically money that is owed or due. Sounds reasonable. But if we dig into it a little further, you scroll down a little bit. If we look at the etymology of the word, where that word comes from, it comes from the Latin word debitum. Well, debitum can be defined as having an obligation. So when we start extrapolating and looking at the etymology of the word, it's like it's not really money that is owed or due. It's meaning you have an obligation to repay. So when we look at debt from that way, debt means whoever lends the money is in control of the terms and conditions of the contract or of the agreement. They define what you have to pay, how often you have to pay. Yeah, they charge the interest rate and everything else. They're in control. It's like, yeah, well, that happens. That's how it works, right? But what happens if you don't pay? If you don't meet your obligation? Best case scenario, if you're borrowing from one of the big banks, all they do is, send you a couple of notices, maybe put a black mark on your credit score. It might prevent you from getting debt in the future or at a reasonable rate, but it's not that big of a deal. Worst case scenario, depends who you borrow from, they might send Luca Brasi to take you out of the knees. Now, consider opposite the other word, credit. If you do the same thing and look it up in Google, it's defined as obtaining goods and services before payment is rendered, based on the belief that payment will be made in the future. It's from the Latin word credere, which means belief. That is when the lender is in control of the contract and puts obligations on you to repay. Versus credit is when the lender believes you're going to repay sometime in the future. So they're not putting obligations on you. They're putting complete faith in you that you will be paying back in the future. When you think of it that way, how liberating is that? To be able to use other people's money where you're in control and you decide the terms and conditions. Isn't that the pure freedom to use other people's money? Now, that doesn't mean there's no cost to do that. They might charge you interest for that privilege, but there's no payment obligation. Unfortunately, I say there's two. There's really one place you can get pure credit here in Canada. There's a second that you can make it act like credit, but the only place you can actually get credit here in Canada is against a life insurance policy directly from the insurance company. Because let's face it, the insurance company has faith that they're going to get paid back eventually. Because let's face it, Mike, what's the absolute worst thing that could happen to you before you paid back the money?
No, I pass away.
And what happens then? The insurance company is obligated to pay out a death benefit. So they pay themselves back first and give the rest to your family. Really, they don't care whether you pay back the loan or not. How freeing is that?
So, Michael, I loved what you were just saying about the difference between debt, credit, and how we are snared or enslaved or free based on our understanding of the actual language. Now, in my hands, I happen to have a 1853 dictionary, and I'm going to just read out loud what the 1853 definition of debt is. Latin, debitum, contracted, French, debt. And the first one is that which is due from one person to another, whether money, goods, or services, that which one person is bound to pay or perform to another, as the debts of a bankrupt, the debts of a nobleman. The second definition is that which anyone is obliged to do or suffer.
The whole idea of suffering and the debt and what you said there, that's almost implied in the term obligation. It could also be being suppressed. Having that obligation to repay is that's what causes financial stress in our society today.
I think it's the burden is what you're trying to
Yeah.
get at.
Yeah.
So, Michael, turning to the same book, the same dictionary, and reading the definition of credit. I'm not going to go through the all the definitions because there's multiple different deviations or variations of the word. But in commerce, trust. Credit is trust, the transfer of goods in confidence of a future payment. When the merchant gives a credit, he sells his wares on an expressed or implied promise that the purchaser will pay for them at a future time.
Isn't that empowering that whoever is lending the money has confidence in you? Wow. As opposed to when a lender says, well, I don't have confidence, so you got to pay me back on a regular basis because I don't know if I'm going to get paid back or not.
Whenever we make a loan payment, we're actually reducing the risk of the lender.
Exactly. And it's a matter of do you want to have that stress on you that's put on you by someone else versus having someone believe in you enough to lend you money? Now, I'm going to be honest with you. If we look at the history of policy loans from the insurance business, it is somewhat self-serving. Policy loans were started in the 1800s. The insurance company noticed that during hard economic times, that people would surrender their policies for that cash value to pay for whatever they need to be done, and then they, in the future, buy new insurance policies. And the insurance companies looked at it and say, "Hey, you know what? I got to give this money away anyway. Well, it's not mine, but I'm missing out on the premiums that they paid every month or every year in the meantime. Wouldn't it be just a smarter business decision to lend them the money that we're going to get paid back one way or another, whether they surrender the policy and we would have to give that money back anyway, or if they die, we got to pay the death benefit anyway. So why not just lend it to them based on credit, belief they're going to pay it back eventually, and keep the business and not have them continue, paying premiums? Does that not work well for all? Isn't it all a win-win situation?
Absolutely. This even goes back, this idea of credit or debt even goes back biblically to the idea of surety. If you're lending or borrowing on the idea of surety, and I'll just read the definition of that. Biblically, surety means a pledge, guarantee, or one who takes responsibility for another person's obligation or behavior.
Isn't that powerful? All you're doing is giving the lender more belief that they're going to get repaid. That's what it's all about. And then all of a sudden, there's no stress. We're empowered. We can do more. That's what I love about the business that I'm in. We're not telling people, oh, you got to borrow money and put payments on them and hope that they pay it back. Hey, you know what? Let's develop an asset that you can get credit against. So you can use the same dollar twice. We put belief in it so we can actually never run out of money while we're alive, continue to use the same dollar over and over again. Isn't that so powerful? Our banking system only uses debt. It's defined around debt. We lend you money and you have an obligation to repay. And they keep that cycle going. That's something like, can you name any product that our big banks sell that isn't debt?
Well, what's interesting is when you put the shoe on the other foot, and this comes back to, again, we're ensnared by legal definition and by the original meaning of words. A bank deposit is not a deposit at all. A bank deposit is a loan to a bank. That's why they call them demand accounts, because these loans can be demanded by the lender, you and me, to the bank. There's many different court cases that prove this. A great book and a great resource that people would be very well to read is The Mystery of Banking by Murray Rothbard, who explains the real role or the real relationship between the bank and the client. The client is actually not a client. The deposit's not a deposit.
You're a lender.
We're the lender.
You're the lender to the bank. And the whole terms and the conditions are you give me back the money when I ask for it. So all of a sudden, a bank account, yeah, it might be an asset to you, but it's a liability to the bank because they got to pay it back.
And all we need to
And
do
this,
is go to the financial statements of the bank to prove that.
exactly. And let's face it, a couple of years ago, the whole idea of shutting down the bank accounts during COVID was just proved it even more because what happened was the government went back to the banks and said, we don't like what's happening. So we're going to freeze the bank accounts. And the banks didn't fight because they looked at us like, okay, are you telling me you're releasing me from my obligation to repay these loans? Why would I fight that? I know it's not right. It's going to annoy our clients, but you're releasing me from my obligation to repay these when they ask for it.
It's very true. And I think we're seeing a duplication of that in Vietnam, where the 3 million bank accounts have now been frozen for refusal to provide digital IDs to people that have these same obligations. The bank is still of the opinion that, sure, we're happy to freeze our obligations to repay a loan. If you're telling me
Exactly.
I'm off the hook, even temporarily, what can I do with that money if I'm not obligated to pay it out?
It benefits the banks. All these words that we use in the financial services, what do they actually mean? The last couple of days, I've been going on another tangent. What does income mean? Income, depending on who you're talking to, means different things. If we go to the dictionary, I believe it says money received, especially on a regular basis, for work or through investments. But is this, we have so many descriptors. Is it taxable income? Is it spendable income? Is it net income? Is it retained income? Income, one word, could mean so many different things. Is there any wonder that we're all confused about money? We don't know how it works.
We also don't know how income is taxable. So, therefore, is it active income or passive income? Well, certainly the biggest issue in corporate tax planning is the idea of passive income, or AAII, as it's properly defined in the Income Tax Act, and how that's taxed so radically different than your active income in a small business corporation, a CCPC.
There's that, or personally, is it ordinary income? Is it capital gains income? Is it dividend income? And what's the effect on that? We're told that dividend income is taxed at less than ordinary income. Well, except we've got to be careful that in retirement, if we've got too much dividend income, the way the taxes are calculated, that actually has a higher effect on reducing our or clawing back our old age security, reducing your spendable income. Really, there's no wonder that Canadians are confused about money. We don't know what everything means, and there's so many descriptors and fallacies. It's just creating more confusion and misunderstoods. And one thing I love about what you're doing and what I've tried to do is clarify these so we can focus on what's really important. And really, that means spendable income. What goes into your pocket that you can actually spend at the end of the day to support your lifestyle and bring joy to your life. Does that make sense?
100%. And the access to capital without claiming it as taxable income is probably the most powerful tool that's yet unknown to the most majority of Canadians. Michael, look, I really appreciate your time today to spend it looking into some of the definition of words and how we can reclaim power by understanding the power that the common language gives us. If you found this video helpful in your journey of financial literacy, make sure you like, subscribe, and share this with somebody who you think may get a lot of value. Michael, again, I thank you. We'll put some links in the description here on where people can get to know a little bit more about you and some YouTube content that they can consume from you. I appreciate your time today, and I wish you Godspeed and have an awesome day.
Thank you.